Hello everyone, George DeSantis here for the Look at the Market week ending June 10th, 2016. This week we had a little bit of a pullback. We sort of anticipated it last week. We had some indications on the daily chart especially that we might see somewhat of a pullback. Well, let's take a look at some charts. Let's take a look at the monthly chart as we usually do first. On this multi-chart of the S&P 500, since it's such a long-term chart, each bar representing a month's data, we don't see that volatility that we see in the daily chart, of course. However, it is interesting to note that we do have this crossover of the Kalman filter above the instantaneous trend line. And when the Kalman filter is above the instantaneous trend line, as it is here, has been here for a long time, for those 7 or 8 years that we've had this uptrend, usually we're an uptrend. So the parabolic is, of course, still situated below the most recent price bar. We're in an uptrend on the monthly chart. Most people won't anticipate that that's the case, but that's what the chart shows us. MACD is trending up from below the zero line. We've talked about that before. It's still not in bullish territory, but it's trending up. And as you know from Alex's work, Alex Elder, best time to be buying the market is when there's an uptrend from below the zero line, especially on the lower time frames. At the bottom of the chart here, we have Elder Force Index still above the zero line in concert with this bullish crossover here. Let's take a look at the weekly chart of the S&P 500. And here's a weekly chart of the S&P 500 that we usually look at. The Kalman filter is still above the instantaneous trend line. The yellow line here is a Kalman. This is the instantaneous trend line developed by Dr. Ehlers. If any of you are interested, you can go read about it. Just Google Dr. Ehler, John Ehler, Ehlers. He has a website, MESA. He's a physicist, was a member of the space team, and so on. So he's a smart cookie. Anyway, to get back to the chart, we had this hanging man here, which was somewhat bearish. We had, and now last week we had this shooting star. Sometimes I call it the finger. It looks like giving somebody the finger. Anyway, the parabolic is below the most recent bar, last week's bar, and so there's no indication to reverse this uptrend, or this uptrend is reversing. RSI 12 is still sitting somewhere around 60, and unless it crosses below 50, I wouldn't get too concerned that this trend is in jeopardy, this uptrend. That's just what I see here, and I follow Larry Pesavento's advice to trade what you see. That's the title of his book. MACD is still above the zero line, and the shorter term moving average is above the longer term moving average. And at the bottom of the chart, percent R is above 80%. So the momentum of this move is still looking pretty strong. When we look at the daily chart, we'll see that we pull back to the support line at the instantaneous trend line on the daily chart. So let's take a look at that. And here's the daily chart of the S&P 500. Since the Kalman filter crossed above the instantaneous trend line, we've had a bit of an uptrend here, pretty nice little uptrend. But last Friday, we have this bearish bar. We pulled back to sit right above the instantaneous trend line. And the question now is, will the instantaneous trend line hold as support for this market, for this S&P? We have the parabolic just below the most recent price bar, Friday's price bar. So we don't quite have a signal to reverse the uptrend. And that's critical here. Now, the Jerry Appel's sum of the rate of change indicator is sitting just above the 4% line. So we don't have a signal to go short here or to sell the S&P. So I'm holding SSO. MACD is trending down a bit, but it hasn't really crossed below the zero line, so there's still some indication that it might hold above the zero line. And percent R is broken below the 80% line. However, it's still pretty high. It's above the 50% line. So we do have we do have a correction here. On Friday, we had a correction. Will it break below the instantaneous trend line? That's the question. With that, of course, will be determined in the coming week. But I'll show you a couple of other charts that that will give us some hope that that may hold. The instantaneous trend line might hold as support. Let's take a look at those. Here's a weekly chart that I wanted to show you too because it contains the Commodity Channel Index or CCI indicator. CCI doesn't seem to be showing much weakness here at all. It's just below 100%. So that gives us some hope that this correction here will be a minor correction. Let's see if that happens. And let's take a look now at another one. And here's another daily chart of the S&P that I wanted to show you. What it shows here, and I put the expert indicator on here so we can read it, so you can read it. It shows that even though we had this pullback on Friday, that because the Kalman filter is still above the instantaneous trend line, the expert indicator is telling us that the market is currently in an uptrend mode. The trend mode is usually characterized by erratic behavior of the phase, display, and the sine wave indicator. Dominant cycle may be changing. The best strategy is to establish a long position and hold until the end of the uptrend. Well, we do have this this erratic behavior of the sine wave, and notice that when it's in that mode, when the sine wave is like that, market tends to be trending up. So there is hope here that this instantaneous trend line might hold as support. Again, you know, that could be wrong. We'll find out next week or the next couple of weeks. Take a look at something else. Now here's another daily chart with another indicator on it, which I'd like to show you. And that is Alex Elder's force index, the 2-day force index. And since we have, here's the way with force index is used. Since we have an uptrend, Kalman filter above the instantaneous trend line, and the force index spikes down, as Alex calls it. In fact, he names his trading club the Spike Club or something like that, but he uses the word spike. When you're in an uptrend and you get a spike down, it usually is a pretty good buying indicator. So we can see that right here, we had some spikes in an uptrend. We had some spikes here. We had spikes here. And those are usually in an uptrend, usually a good buying opportunity. So we'll see how that holds up. And here's the best choice chart. It's about a 3-month chart. And what it shows here is that it's regression analysis or regression chart. And what happened, you can see very clearly here that we got to the 90% line, measuring some overbought condition. And then we bumped right back for the last 2 days last week. We came right back down and sit right at the 50% line. And that's on the 3-month chart. If we look at the 6-month chart though, so you will find more volatility on this chart, of course. If you look at the 6-month chart, let's take a look and see what we find. So on the 6-month chart, of course, we're sitting at the 50% line here. And since it's a longer term time frame, there is room to the upside. So we're sitting right here at 50%. We'll find out pretty soon if we can go any higher, but of course we're bumping up against that same resistance that we've been at. We went up to 2120 last week, but we gave back quite a bit of that. Let's take a look at okay, and here's a chart that we often look at from stockcharts.com. And what we find is that on this daily chart, we have a red candle now, which tells us that we should not be buying here. We're not allowed to buy it, to buy this S&P index. However, we when we look at the weekly chart, and of course on this chart we see that same spike down on Elder Force Index. We find that the 9 EMA is still above the 30 weighted moving average, green line, red line. So the trend is still up, and in an uptrend, when we have that spike down, it is usually a good time to be buying the index. So you have different indicators showing a few different things here. On Elder Force, it's saying, look, this might be a good time to buy the index. However, on the impulse indicator, we have a red bar. So there's a little bit of a conflict here. Let's take a look at the weekly chart, because that's the one we should look at first anyway. And on the weekly chart, we see that the bar is blue. So we're allowed to go long or short on the weekly chart. Therefore, I am not selling anything. Um, I because the weekly chart is the chart we make our strategic decisions on, according to Alex, and I follow his advice. So I'm not selling. There are too many indications that we might find support here at the instantaneous trend line, and the 9 is still above the 30, so we're still in an uptrend, both on the daily and the weekly chart. And we'll see where we go from here. But yes, we are having a correction. Let's take a look at something else if we can. And the last chart we look at is this one, which is the percentage of stocks above the 200-day moving average of the S&P 100. So we can see that we're still above the 200-day moving average. And as long as we don't drop below this 65% here, I think we're in pretty good shape. So in summary, the monthly chart is up. We're in bullish trend still. The weekly chart is still up. We're showing some weakness, but that may be simply a correction back to the instantaneous trend line on the daily chart. We do have some candlesticks on the weekly chart that look um, bearish, and we might get a further correction. But as of now, I'm not selling anything. I haven't sold anything, and continue to do some day trading with TNA, and that's working out pretty well. Have a nice weekend, and we'll do this again next week.